So we've been getting a number of messages, text, and emails that some of you see like the timeframes you're using for analysis are very big for you and you cannot contain them. Okay, so we're going to solve this in a just a simple way. I'm going to do analysis on EURUSD using the method we've been showing you. Then I'm going to use a different time frame channel to make it easier for those who are saying that the timeframes are big. So just stick until the end and you're going to see the two examples I'm going to use. Remember, first, we're starting with the way we have been doing. Then secondly, I'm going to give you other timeframes that you can use for your top-down analysis so that everything can make sense, right? So as usual, our normal way, we have been starting from monthly to get our direction. Now, we have been talking about EURUSD ever since it was down this side, how it was supposed to come up here. So you can clearly see that the market came and found this strong level that had areas of sellers. This area had sellers here, and the market touched and it was rejected. You can see it was giving us like triple tops here. The first top rejected, second rejected. So went and tapped in here and then we pushed. So some people will be saying that there was liquidity around this area, so the market rejected downwards, right? So we expect the market to keep going downwards, right? So when you go down to the weekly time frame, what do we observe? This very area here, you can clearly see that the market was approaching while losing momentum, right? Not like the way it was coming with a strong push upwards. It started losing momentum when it was going upwards to touch this area here, broke this area here, and then went down, even broke this standing point here, then it's continuing down. The week closed when it was pushing downwards, right? So let's try to look clearly up to what exactly happened when the week was closing last week. What do we observe? Now, clearly we can observe, someone may be wanting to say that we do have a structure here that the market has created. We have like a big M. We talked about three types of M's. The first one is double top. Second one is an M with this lower high. Then a third M with this a higher high here. Then we pushed down, right? So this is something like this that we can see. So we expect the market to come back into this area. That is one confluence. The second confluence is we have a rejection area around here, which is not a proper retest of this area here. Touching the exact area that we want the market to come to, not a proper retest. So meaning that we want the market to come back into this area here before. Either we can continue lower or to make double bottoms before we can change direction. We're getting it? So monthly and weekly are speaking the same thing. Direction is downwards from monthly, where after touching here. So weekly also is giving us a structure to trade that this area here has been broken, yes. And some people may say like it was tested with this candle, but it's not a proper retest. So what do we want? We want the market to come back and test it. And what do we observe? We observe the market is approaching critical levels of support. Are you getting it? So we're into this support area here. So the market could actually be rejected to test here. Unless we break lower, then we have another area down here. But we're not interested in this level down here until these levels are broken. Are you getting it? So when we come down to the daily time frame, what do we observe? In the daily time frame, we observe that actually the market gave us a false breakout. You guys know we talked about false breakouts. When the market comes and gives a false breakout, then breaks back down. This is a false breakout. So we mean that this area here is virgin. It needs to be tested. We need the market to come back and test this area before continuing downwards, which is this area here. So as the market pushes down, I want you guys to be observed here. Then we can go and test there, right? So when you come down to the one of the entry time frames, which is H4, it's a bit more clear actually. When you observe the market is on a downtrend, we don't have a change of trend yet for us to have this push upwards into testing this area here, right? So what do we want to see? We want to see the market shifting from making lower lows here that it's making right now. Let it maybe make a double bottom, and then it gives us like a W by breaking this neckline. Then we start making higher highs and higher lows. Then you can find how to take your trade until this area here. Then if it changes the trend again from making higher highs to making lower lows, then you can take your trades to continue down until this level here. But currently, we are still on a downtrend. You cannot want to start buying because that's touched your level that we are going to buy up to this area. No, you have to wait for the market to shift fast before taking a buy up to this area here. So your target, but currently right now we're interested in changing trend. Now, this is the first type of analysis that we have been making. Now, if these time frames are big for you, what can you do? Instead of starting from monthly, then you go to weekly and you go to daily, you can change this and start from daily, H4 and H1. So how are you going to use this? Daily is going to be for your direction. H4 is one of your structures. H1 is for your structures. So for another structure, sorry. So H4, you'll take your entry from minute 30. H1, you'll take your entry from minute 15. Just like here, weekly we have been taking from H4. Here we have been taking from H1. So you can change, instead of this, you can change to this if these time frames have been much bigger for you. Are you getting it? So this will be your entry, this will be your entry. Then here you can refine into using min at 15. Here you can refine using min at 5. Let's just take an example practically on this. You know, trading is about practice, not theory. So what if you're to start there, what do you observe clearly? Now we're in a downtrend here, we can clearly see we're making lower lows and lower highs. So what do we have to do? We have to identify what has the market done now. If you observe, the market has currently just broken this low here, but we didn't test it. Are you seeing here? This area here has been broken, but the market attempted to test but didn't reach here. So we need the market to come and test this area before continuing down. Are we together? Someone may be asking, what about this one here? This one here was coming to test this low here that the market broke. So when we broke down here, this area here has not been tested. So we need the market to come back here before we can continue down. Are you getting it? So this is the direction that we're having. We have a market that's approaching a very strong level of support level here. Actually, it's already tapping into it here. So if the market changes trend here, we shall have a push up, and then before we continue down, either to make double bottoms or higher low. We don't know what the price will do. We have to react to what the market has showed us. Then you go down to H4 for the first time frame of your structure. Now, when you come to H4, what do we observe? Now, H4 is telling us that we are still in a downtrend, just like we observed in that. So you can just adjust this slab so it's not so big. You can adjust it to this area here, like this. So when you come to H4, you can clearly see this area here has not been tested. It's a virgin area, not tested. Now, what structure do we have? We have a market that is slightly decelerating, but it made a low, and now we have tested it. So if the market comes and fails to take out this low again, because in a downturn, we need the market to make lower low, lower high, lower low, lower high, lower low. If the market fails to take out this level and then breaks above on a retest of this area, we can take our trade up to this level here. Are you getting it? So that's what the first structure is showing you. What about H1? What is H1 showing us? Now, when you come to H1, H1 also clearly shows that the market has not yet changed, has not yet shifted, right? You can clearly observe that the market made this low here, lower high, low. Then we're testing this lower high that the market broke. So currently we are pushing down. So if the market fails to take out also this area here, then there's a possibility we're going to have a market coming back to test this area before we can continue, just like how they are structure. The structure in the daily time frame gave us when we're looking for direction. Now, one thing I'll advise you is that the more you go to lower time frames, the market is going to give you a lot of candles, and sometimes you'll be confused. You can use the first structure, which is in H4, to sieve out the noise for you. So I can just change this color to blue. So you can see we have this low here, and also we have this low here. So you can use them. The more you go to lower time frames. For example, if I come to H1, everything is going to be clearer for me. You see here? I can know that this is the area that the market has to break above before I can start looking for my entries. Also, if the market comes here, this is the first touch, second touch, third touch, and fails to take out this area here, then I know that if the market comes and breaks above, it will have created a structure like this. So on a week retest, then I can be taking my trade here. Alternatively, also, remember we have a level down here. If the market breaks lower, we can have a week retest into this level here, and then we can push lower here. Right? So it becomes more and more clearer for you. Then the other one that we talked about are the entry timeframes that you can use. Now, we talked about min at 30, because someone may be saying, but this distance is short. Now, when you come to these smaller timeframes that we're now using as our min at timeframes, which originally we're using as our refining timeframes. So if the market breaks above here, in your structure time frame, then you can switch to this entry time frame, which is min at 30, one of them, or even min at 15, and you can take your trade up to this area here. Or if the market breaks below this area here, on a weekly test here, you can take your trade up to this level here that we have identified in the directional time frame, which in this case is daily. So I hope those who are struggling with monthly, weekly, and daily, you can utilize this. It's the same approach. We're using market structure, pure price action, but this time we're going to the time frames that most of you are used to. I really hope this helps you guys and it shortens your journey to consistency. Have a great time.